All right, guys, welcome to a video with me, the Stonk Dad. I am the Stonk Dad, and I am super excited to be here with you guys. I've not made a backtest video in a while, but I thought I'd switch it up a little bit and do a little bit of a different video for you guys. I'm excited. As you haven't already noticed, the title of this video is going to be my A+ setups, the guide of what I look for setups using flow and data analytic tools. So stick with me on this ride. I want to keep it short like always because I feel like people tail off if it's longer than like 15 minutes or so. So I do want to keep it short and concise and straight to the point. But as always, if you guys want a little bit more detail and stuff like that, you can always hit me up here on YouTube or on Twitter or Discord, wherever else you want to talk with me. So yeah, let's get into this video right now. Okay. So what I usually look for right in the mornings for my setups, I always look for a divergence between calls and puts. Now, if you aren't familiar with this chart, I'm going to briefly go over all these things. So do not fret if this confuses you. But to kind of guide me on this little explanation, I have a tweet actually that I made a while ago, almost a year ago actually. So let me pull that up real quick. It's one of my pinned tweets, and I do like sharing this with a lot of people because it pinpoints all of the things that I look for to get into a trade and what constitutes an A+ setup to me. Now, an A+ setup to me may be different than you, so yeah, it's just my strategy, and that's what I'm sharing here with you guys. A lot of you guys have shown interest of what I look for in the flow data and just the setup in general before I get into a trade, so that's what this video is going to be about. So yeah, all these are just opinions as always. So let me pull up this tweet here so you guys can see. Make this my tab here. Now, if you guys are interested in looking at this tweet over after this video, you can always go onto my page and see it. It's my pinned tweet here at the Stonk Dad. So here is the updated, you know what, you guys can't, oh yeah, you guys can see it pretty well. Okay, so right here I have my updated market net flow strategy. It nets about 80 to 90% win rate, which I go over every single week in a YouTube video. I look at the Convergence tool and I backtest it for you guys. Now that doesn't mean that I take every single Convergence flip on market net flow. Here, let me show it to you guys. It's hard for me to see. I can't see my screen here because of my camera. But it doesn't mean that I take every single colored flip here on market net flow every time it flips green or red. I always add to my strategy, which I'm going to share with you guys here. Now, so I say here, some of these strategies have remained the same ever since this tool came out. But for the most part, it stayed the same ever since it did come out. Market net flow, that tool came out almost 2 years ago, maybe a year and like 9 months ago, I think. Don't quote me on that, but from what I remember, I've been using this tool ever since it did come out. So my first rule of the day is always, so when I wake up in the morning, I wake up, the market opens at 6:30 for me, and I usually only wake up like maybe 10 or 15 minutes before the market opens just so I can not be as groggy as I get on the PC and stuff. But for the most part, I just kind of hang out and look at data for the first 15 minutes of the market when it opens. So I come over here to my dashboard here, the flow dashboard. Now this does not look, it looks nothing like this at the very beginning of the day. When the market first opens, it is a blank screen. And then once data comes in for the flow for that day, then it starts to develop a little bit. So you can see here at the beginning of the day, this is a day's worth of flow. You can see that we start right at 0 for the most part every single morning. And you can see flow develop if there's more puts being bought or if there's more calls being bought. Pretty much right in the morning. And the first 15 minutes to 30 minutes is typically when I tend to make my first move or first decision on where I think the market's going to be going. So for today, it's kind of like a bad example because flow did flip bullish later on in the day. But that is the first thing that I always look for when the market opens, is if calls are being bought up more or if puts are being bought up more. In this situation, puts did go up a little bit, but calls slowly ramped up. And I can explain that a little bit more of what I look for if the flow flip-flops and it goes against what my bias is with flow, okay? So in the morning, I look for a divergence in flow, and what that means is if there's a divergence between puts and calls, if there's more puts being bought or if there's more calls being bought. I kind of already explained that a little bit. But I always look for about a $5 million divergence between the two. So if there's about, say in this example, you can see calls are way above puts. So this is a very good divergence. You can see calls are about 20 million here, and then puts are at zero net cumulative net premiums here. So what that means is there's more calls being bought in the market at this certain period of time. And you can kind of see that the market moved with it as well. So yeah, that's what I mean when I look for divergence. The bigger the divergence, the better, the more strong the move, and the more confident I am in that move if flow data is lining up with that. And I'm going to give different examples, not just from today. So just bear with me as I go through this strategy. And I'm going to go through this strategy one more time. As I explain each step, I'm going to go through it one more time in real-time examples. So just stick with me for that, okay? So that's my first step, right? Trading before 7 a.m., 10 a.m. Eastern time is risky but never ruled out. I allow intraday flow to settle and flow traders to have a better idea of what their bias is going to be after the first 30 minutes is up. Then this is when I tend to pick a side. So that's kind of just a synopsis of what I explained there of allowing intraday flow to settle for about the first 15 to 30 minutes of the market, and then I make my decision. So I may edit this a little bit because I may change this to the first 15 minutes because I noticed that we do miss a lot of the move if we don't get in quickly after the market opens. We can miss some really, really nice moves. So I may change this to 15 minutes instead of 30, just to give us a little bit of cushion to move it. But 30 minutes is also okay. I mean, that's usually what I do too. Sometimes I just wait for the top of the hour to see where flow is. And for the most part, sometimes flow is really, really choppy for the first 15 minutes. So I believe that's why I put 30 minutes here. Okay. Oh, and I think I did explain number 2 as well. So I'll just go over it real quick. So I said number 2, pinpointing divergence is key to determining the strength of the put to call direction. I like to look for a $5 million or above divergence. The higher the divergence, the better, and the more confidence I have in the move. It is ideal if calls or puts are below zero net negative for a more confident move the opposite way. So I did kind of, excuse me as I move my camera here. So I did kind of explain that a little bit more. So as long as one way is more than $5 million net negative, or sorry, not negative, $5 million between the two, calls or puts, then I have a more confident bias in that move. So in this situation, we got a really, really good move to the upside in today's price action. We did see calls break above. In this situation, we did have a divergence of about $5 million, maybe a little bit more. Now that I look at let me look at it. Puts are about 3 million, and then calls here are about 9 million. So that's like about a $6 million divergence if you subtract those. And then with that, we got a nice move from about 454 all the way up to 456, which is a really, really good move in SPY. So yeah, that's just a little synopsis of what I look for. I always look for the divergences. The big gaps in between this red and green line is always good. And again, I'll go over different examples so you guys can see what I mean by that. Okay, let's move on to number 3. So after I pinpoint the divergence, after I kind of have a bias in the market of where I want the market to go, I always find an entry for a play. Now, this can be different for every single person, but for me, I'm going to share what I do when I look for a entry for a play. And that's kind of what I explained here. I said this is more of a personal choice to how you may enter a play, but I use basic support and resistance levels, gamma exposure levels, moving averages. I use EMAs, but I almost never take a trade on huge rips or dips. For example, do not trade calls at high a day and do not take puts at low a day is what I mean by that. Blah, blah, blah. Let's see what I say here. Always remain patient. I also have okay, so then this is when I talk about convergence. Okay, so let's do a little bit of an example here of what I mean by number 3. So I know you guys have heard a lot about the convergence tool, what I talk about here in my backtest videos. But if you don't know what that means, basically this bar down here is another tool that I add to my arsenal, and I use it almost strictly to find entries to my plays. If everything lines up and convergence is green, that is when I hit the trigger and I press the buy button. So in this example, this is a really good one actually for today. You can see that my first step was looking for the divergence. So this was today. So there's obviously more calls than puts up until this point. You can see that we had a huge rip here. Calls and puts or calls are clearly in the lead here. And we had a little consolidation here, and then convergence flip green here. Now, if you flip on over here to the chart, you can see it a little bit better of what happened in price action. So this is where we could have caught a really nice trade. So here's the rip right here. This is right here, correlation to the chart. You can see that we ripped up here, we consolidated a little bit, and this is exactly where it was on the 5-minute chart. And then it flipped green during this consolidation phase right here. Now, what I look for in an entry here is obviously something like this. We have a huge rip, we come back down, retest EMAs. Now this is a really good indicator that I use on TradingView, is called Rip Straight EMA Clouds. I use the 9 EMA pretty well for day trades like this. So it ripped up, came back down, retested this EMA, which was a really, really good entry for calls. And green convergence was right here. So that was a very, very good entry for calls. You could have caught a nice $1.25 or so move to the upside on SPY. Maybe even more if you got in on the EMA flip. But if you were a little bit late, then you could have still caught that nice move. So that is something that I really, really look for. And I'm going to give different examples so I can show you guys what I look for. Because there's actually there's a couple of other things that I look for when entering a trade. It's not always going to be as perfect as it was today. But yeah, this is something that I really, really look for, is the huge pumps up and then always pull back to the EMAs, and then you enter calls, and then always look for the green convergence to coincide with that move up. Now I'm going to be talking about GEX Levels too, which is something that I also used for confirmation. There's some really, really good GEX levels which support these price movements very, very well. You can see by these yellow lines, these are GEX levels, and you can see that there's lots of support and resistances at them. And this was also a very good one where we broke above it, came back down, retested the EMA, and we got back above this GEX level, and it went very well with flow and convergence too. Okay, I'm talking a lot here, so I'm sorry. Now, I thought I was going to have like a little script to go with this video, but I do not do well with scripts at all. So I'm just kind of rambling. So feel free to dog me in the comments if this is confusing you at all. But I'm trying my very, very best to keep this as simple as possible. But yeah, that is just something that I look for my entries. We're going to move on here. I'm going to be talking about other things as well for entries, as well as these EMA flips too. Okay. So let's see what else I say here. Okay, so convergence. So I will get into a little bit more detail of the convergence bar here, because that is step 4 that I have here on the net flow strategy. So I've found that convergence to be one of my number 1 indicators to spot a trend and ride that trend. Convergence is the strength of price action relative to the market net flow, or the flow. It is quite, what I put here is like, it is quite literally magic. And I could go on and on about convergence, which I do in other videos if you guys are interested. All I have to say about that is that I rely heavily on the convergence tool, because that is pretty much seals the deal of the A+ setup. Okay. And I talk about convergence all the time. You can see that when we have green flips like this, and when flow is very strong, you can see really, really nice moves on SPY. And then the contrary, for gray convergence here, you can see that once this flipped gray, we moved opposite of what flow was telling us, right? And you can catch some really, really nice momentum trades and get in and out fairly quickly. If you're a scalper mindset, you can do that as well. I'm more of a longer day trader, I guess you could say. I like holding for most of the day, up to an hour to most of the day, depending on how well the price action is going, right? I always have a strategy and stop losses and stuff like that too, okay? But you can see that these convergence bars down here, I kind of got a little bit off topic here, but you can see that the convergence bars down here show the strength. You can see that once it flipped green here, we did have a little bump up here, but then we turned it back down, and then it flipped gray and then green again, and we kind of chopped the rest of the day there. So it's not that great of an example. But for the most part, you can see that these convergence bars down here, it's not 100% all the time, but I want to say 8 times out of 10 it will work, okay? So about 80% win rate, and that's what I talk about a lot in these other videos that I share on YouTube, okay? Okay, so enough about convergence. Let's find an exit for this play that we got into. So when I get into a play, when something like this happens, when we have a nice break, we enter on the EMA retest. Convergence is great. Everything's lining up very well. Now, that does not mean that that play will go your way, right? This is trading. Anything can happen. No one knows exactly what's going to happen. So for that reason, we do have to have stop losses and set. We have to take profits at a certain amount of time, and we just have to manage that position perfectly. And no emotions, right, going into this. So what I do, it can be different for everyone, but what I do and what I've found to be most profitable, and also it just works well for me, and what I like to do is when I get into a play, I always start trimming profits around 10 to 20%. Most of my profits are taken, or most of my contracts are taken at those levels, 10 to 20%, depending on how quick it goes up. 20% is pretty much where I cut half to about 75% of my contracts on SPY. And then, so what I have here in step five is I find an exit. I shoot for profits around 15 to 30%. It's kind of what I have here. I've changed it to 10 to 20% just because of how these contracts are moving lately. So I take most of these contracts out at these levels, and then I leave runners depending on how flow is doing. So if flow is doing very, very well, and I think that there's going to be a trend day, I will hold runners. I most often than not, I do hold runners. No matter what happens, then I always set my stop losses, and I either set my stop loss just below my entry, and then as price goes up, I'll set it to break even, and then I'll just slowly move it up as the price moves up if it does go in my favor. But for the most part, when I do take profits around 15 to 30% or so, 10 to 20% or whatever it is, sometimes it does go up to 100%, maybe even 200. But for the most part, it does kick me out at either break even, or I just get out fully at 20% or so. I do enjoy the compound gains, the small gains. I really appreciate 20% is amazing. Not very many people can say that they're consistently hitting 20% gains. But yeah, that's what I usually shoot for. I do have a trade log with all my trades, all my losses and wins and stuff like that too. And you do see every so often, you will see a couple 100%ers, 80%ers or so. And those are just my runners pretty much. Okay. And then for step 6, I think this is just to wrap it up. I just said that this strategy has allowed me to maintain about an 80% win rate. And that's just because of the strategy that I have with convergence, flow data, EMAs, and everything of that matter, which I just explained. So I take high quality setups and let those trades come to me, and they all have to check these boxes in order for me to get in. Now, some of these days I don't even trade. Like the past month or so has been kind of rocky for me. I haven't been trading that much, but when high probable setups come, I do get into those. Now I do aim to at least take one trade a day for myself, and I did pretty good for a lot of this year, actually, up until like October or so, and then it kind of faded off a little bit. But I do shoot for about a trade, just one high quality trade a day, and if it doesn't go my way, I just reset the next day, and that's pretty much how it goes, guys. Only high quality setups, be very disciplined in what I do, and it has to check all of these boxes as I get in. Okay, so let's talk a little bit. So that was my pretty much the lowdown of my strategy for market net flow, what I look forward to get into the things. Now there's a couple different things that I do want to talk about at the close of this video here, which is GEX Levels, which I talk highly about. And I know this video is going overboard, guys. Oh man, it's already in 20 minutes. It doesn't even feel like that, but I'm going to keep going. Hopefully you guys are enjoying this. But I do want to talk a little bit about GEX Levels, and then I do want to do a couple of real life examples, backtest trades. And I'm going to do that live with you guys. I haven't pre-planned any of this, so I'm going to choose a random day, and then I'll show you exactly what I would look for on that certain day. Okay, so it's not going to be pre-planned. I'm just going to click on a random day when I do that back test. But let's talk about GEX Levels a little bit. And today was a really good example of what I do. So I'm going to briefly go over this. I could do a whole video on this, but I'm going to briefly go over this because this is a huge part of my strategy here. So this is the 0DT GEX Levels, and what these are is the negative and positive gamma of each option expiration contract, 0DT, so not each expiration. So this is just strictly the 0DT gamma exposure for SPY contracts. So you can see that once these levels get negative, price tends to go towards those negative levels. And again, I'm not going to get into much detail of this, but what you need to know is negative levels attract price, and then positive gamma exposure levels reject price or pin the price towards that level. And what I mean by that is if price gets to a positive level, it can kind of chop around or just get pinned there, or it can have a very nasty rejection or support level off those. But what I really look for is the negative levels, because that attracts price and that can be a price target. So you can see that today we had this orange line, and then whatever this color is, I'm colorblind, I think it's like an off orange, but this is an orange line, and then this one's like a yellowish orange. But once these got super negative in the day, you could see that price, so this got negative. These both got very negative at about 12 a.m. Eastern on the hour, and that is about right here. This is about at 4:56 on SPY. Oh, it's kind of hard for you guys to see on because my stupid head is in the way. So let me let's drag this down a little bit. So you can see this is 4:56 on SPY, this support or resistance line. And this is when these negative gamma exposure levels started to go down. You can see that price went down from 4:56 because this negative 4:55 started going negative, and price met it. And then 4:54 also was going negative at the same time. So once price met that 4:55, we saw a little bit of support, but then we broke down and immediately went straight to that 4:54 level, which was a huge negative GEX level. So that is what I really look for in my trading strategy. I look for negative levels to the upside or downside, and that can be very good price targets and directional bias directions on where the price of SPY is going to go, and you can catch some really nice moves, just like you saw today to the downside. This moved $2 to the downside, and if you strictly just use the GEX levels here, you could have made a lot of money on the downside there. Okay, so that's just a brief summary of what I look for GEX levels. I use Convergence, I use market flow, I use EMAs, and I use GEX, and I combine those all together to create this wonderful what you would call an A+ setup. Okay, so if I was going to use Convergence and flow for a move to the downside like you saw here, you could have got in on the gray convergence flip here. Once we broke below that 4:56, you can see that price was going against flow, and then once that gray convergence flipped, it matched up perfectly with 4:55 and 4:54 negative GEX. You could have caught a really nice move, and that was a high probable setup there. Okay, so yeah, that was just a brief overview of GEX. Now let's talk about some real-time examples. I kind of did one for today's, for the, what day is it? The 28th of November. So I did a little bit of a back test for you guys of what happened today with the data and then price action. So let's take a look at some other days. Let's choose, which day should we choose? Let's randomly choose like the 9th or so. Let's do the 9th. Okay, so this is the 9th of November. Let's take a screenshot of this. Now, but just by looking at this, I can see that there was only pretty much one good setup for today, for that day, the 9th. You can see that in the morning it was very choppy for the first 15 minutes, and then calls started to break out around the top of the hour. So about 30 minutes after the market opened, that's when you saw calls obviously take the lead. But then you saw price kind of chopping down, kind of trending down a little bit towards that 436 level. It looks like it didn't quite hit 436, but it did get kind of close just by looking at it right here. But you can see that calls were obviously in the lead of puts here in this situation. And then right here is when you saw calls go up and then puts go down, which is a very, very bullish sign. And then you saw the green convergence flip, which happened around this green dot here, which would have been an okay entry, I'd have to say. It did break above EMAs, it looked like. I can also go and look on the exact day on the chart. But for just this video, it's going a little bit long. I'm just going to look at the price action here on the SPY, on this white line, which is the price of SPY. So you can see that it flipped green about at 437 or so on SPY. And we did trend up a little bit towards that 438. It looks like we pretty much hit that 438 level on that flip. Yeah, we did. So we moved about $1 on SPY, which is a very good move for the convergence bars here. Okay, so that was the only A+ setup that I saw for this day, just strictly looking at market net flow. And you can see that for the rest of the day, convergence was great, and it was going against what flow was telling you, right? So you could have gotten puts at the gray convergence flip here, which would have made you even more money, it looks like. So sometimes grays can be better, but I tend to look for the colored flips, and I like to go with flow and not against flow, just because I like it a little bit more. I've seen people use gray convergence very, very effectively though too. And you can see that puts went up to later on in the day, about midday, and you can see that we had a nice trend down from about 438 all the way down to 434, which is a $4 move to the downside. So that was an example of an A+ setup there for the 8th. I can't remember what day I chose, something like that, the 9th of November. So we'll do one more and wrap up this video because it is going a little bit longer. So let's choose what day. How about we'll do like the 20th. We'll do last Monday. Oh, that was a good one. Okay, so this is a really, really good example of two different A+ setups that I see, maybe even three. So let's take a screenshot here. Now this is a very, very bullish day. This is what you want to see guys. Okay, so you can see that calls pretty much right at open at the gate. You can see that calls made a huge run about 15 minutes after the market opened. You can see that calls were about 10 million net positive premium at about here. So you can see that bulls had full control here. Convergence already flipped there, so you could have gotten in mid convergence, but I tend to always wait for the grays and then I wait for the next green, just because I like it a little bit more. I think that the win rate's a little bit more if you wait. So in this situation, you could have wrote it from like 451 all the way up to 452.50 or so is when it flipped gray, and then it flipped green again here. Which that one went up about 50 cents or so, and then it flipped gray again because it was kind of midday. It was kind of rough around here, but obviously you see calls going up and up and up, so you could have waited for the next green flip, which this one was the really, really good one for the day. So this one went from about 453, this convergence flip here, all the way up to 454.50. It looks like maybe even 455. Yeah, maybe even 455. So that made that went up about $2 on SPY just with this convergence flip towards the end of the day there. Okay, so yeah, that's pretty much what I look for. I always look for the divergences in flow to start the morning. Sometimes it's not as perfect as this, so maybe I'll do one more example of where it might not work out very well for you. But that's why I have the other steps in my strategy, which I went over, the how I manage those positions. It's very, very crucial that you guys do that, because it doesn't always work out in your favor, just like those last two examples. So let me see if there's one that maybe didn't work out. I think there was one day or maybe 2 days this month that didn't work out very well. Oh yeah, this one. This one was really, this is a good, this is a good of a bad example of what market net flow was doing to the bearish side, but price continued to go up, okay? So right out the gate, this is probably one of my losing days actually, because flow data did not work out. But I do want to give you guys both sides of how this may work. It works a lot more than it doesn't. This is just one of those days where it didn't work out. So I'm going to give you an example of why it didn't work here. So right here out the gate, you could see that puts were well above calls. Calls were selling off. So I'm almost positive that in my mindset, I said, okay, we're going to have a nice bearish day today. We're going to trend down just because puts are well above calls in this situation. Calls are being sold off. And then I probably did enter puts right here actually when the convergence flipped red, and that was probably my loss. But I probably had a stop loss set when convergence turned gray, and I probably didn't lose that much there. Okay, so I always look for that. So you can see that convergence did turn gray, and then we head up. We were doing opposite of what flow was saying, and then it looks like it did flip red here, which it did go down a little bit, but it was kind of choppy for the most part. So this is why I do look at convergence for the most part to enter and exit trades, because it can be such a powerful tool to keep you out of bad trades and then in really good ones, right? So this was a bad one, but you probably wouldn't have lost that much because you got out at great convergence. And then this one, you probably would have made a little bit, but still you would have got chopped out. And then for the rest of the day, it was just great convergence. Even though flow was super bearish, you can see that we just trended up for most of the day. So that was an example of a bad day. I hope you guys enjoyed this video. I know it was very long, but yeah, I hope you guys grabbed some snacks, a soda, or some water or whatever to drink, and you kick back and enjoyed this video. But yeah, again, if you guys have questions about the strategy of my A+ setups, feel free to leave a comment down below. I also have a Discord where I go over my thought process every single day. I go live every single day showing these amazing tools on Discord. So if you guys want these live tools in your arsenal and you want to see how the flow reacts, you want to see the GEX levels move, you want to see all that, hop into the Discord. It is in my link down below. And I don't want to push that on anyone, but I'm just throwing it out there for you. I'm not that best of a salesman, but I know how amazing these tools can be for you guys for trading, and that's pretty much why I'm sharing it for free on YouTube. But yeah, if you guys do want those live tools, feel free to hit me up on Discord. Go join the Discord, and I may or may not have a discount code for you for the remainder of the month for these live tools. And I'll throw that in the description too. I'll probably run that for the next week or so, and then it's kind of like a soft thing. I'm not really announcing it, but I will give a very nice discount, and I'll leave it in the description below, strictly for those who listen all the way through for this video. So I hope to see you guys in Discord. I love you all, and I will see you in the next one.